Hey, welcome back to The Dive. Today on the show, we're thrilled to have back best-selling author, speculator, the founder of Casey Research and internationalman.com, Doug Casey. Doug's here today to answer some of our questions about Joe Biden's budget, the Fed's next move and what it means for inflation, layoffs in the tech sector, ChatGPT, why U.S. investors should be concerned investing in China, digital currencies, copper, silver, and gold. And be sure to check out Doug's latest book, Assassin, available on Amazon today. Hey, Doug, welcome back to The Dive. Thank you so much for joining us today.
It's a pleasure. Cassandra, I'm reaching you from my farm in Uruguay. And I know you're in Canada.
Yes, I am. Well, thank you so much for taking the time to do this with us today, Doug. Okay, so let's start with the news that President Joe Biden's budget will propose hiking payroll taxes on annual incomes over $400,000 to keep Medicare solvent beyond 2050. Do you think entitlements and unfunded liabilities are going to be a big problem moving forward?
I think it's funny they talk about keeping Medicare solvent beyond 2050. Medicare is, first of all, it's a moral abortion. People should take care of their own bodies, not slough off the responsibility for medical problems on the government. That's number one thing. Second thing, they're talking about 2050. That's almost 30 years from now. The whole world is going to be totally and absolutely different. These people can't plan that far ahead. And the U.S. government is already terminally bankrupt. So at best, this is rearranging deck chairs on the Titanic. So the fact that these people talk in this way is a further indication of what kind of deep trouble the U.S. is in at this point.
Jerome Powell put another 50 basis point rate hike back on the table. Do you think higher interest rates are here to stay?
Well, people have forgotten that interest rates fluctuate a lot. And back in the early 80s, the U.S. government was paying as much as, depending on the maturity, 15, 16%, 17% for borrowings. And the situation wasn't nearly as serious then as it is now. The problem with Powell raising rates, and of course this is a market function, the Federal Reserve shouldn't exist. That's something that most people never think about. Most people believe the Federal Reserve is part of the cosmic firmament. But on the one hand, assuming that you believe the Federal Reserve should exist, inflation is going to get totally out of control because the government is spending much, much more than it's taking in taxes. And the difference is made up by selling bonds to the Federal Reserve, which prints the money. Now, of course, raising interest rates reduces the amount of borrowing in the banking system. So, yes, that moderates things, but they could bring on a credit collapse in the meantime because the world is so full of debt at this point. So, is what Powell is doing, is it smart or stupid? Well, it's almost an unanswerable question, because if they do raise interest rates, there's a danger of bringing on a 1929-style credit collapse. If they don't raise interest rates, we're looking at much, much, much higher levels of inflation. So they're damned if they do, and they're damned if they don't. They painted themselves into a corner, like that print I have on the wall in back of me.
Okay, so let's move on and talk about the tech sector. After laying off 13% of its workforce in November, Meta is reportedly weighing another round of job reductions this week. Do you think the layoffs within the tech sector are meaningful for the overall economy?
The tech sector itself has been grossly overblown. So I'm sure that most of the employees of Meta and Google and Amazon are what we call supernumeraries at this point, something that Elon Musk, I think, has demonstrated with Twitter, where he's fired about 75% of these people. Is it going to have a big effect on the economy itself? No, not really. But it's a good thing to see that they're tightening things up. I'm not interested in buying any of these tech stocks yet. An indication of the fact that, regardless of the fact that they're rationalizing these companies finally, is the fact that Dogecoin, I call it Doggy Coin, one of the cryptos, still has a market cap of about $11 billion. And it was a coin that was created as a joke that serves absolutely no useful functional purpose at all. And still, the market thinks it's worth $11 billion. So, yeah, I think it's great that they're firing people. But I'm not interested in these companies either for participating in their social media function or being a shareholder.
Speaking of tech, what are your thoughts on ChatGPT? Do you think that we're at an inflection point with AI?
I do. Moore's Law, which basically states that the computer power doubles more or less every year, and costs have in that time, has not been repealed, and it has lots of applications. Moore's Law is evident in lots of high-tech areas today. And AI is perhaps the most important of all. We have nanotech and biotech and genetic engineering and space exploration, so many things. But artificial intelligence is like the ring that can rule them all. And it's finally come into its own. And it's going to keep compounding. Question is it going to be a good thing or a bad thing? And since I don't have a malevolent view of the universe, I tend to think that everything is basically good. And as AI becomes more and more intelligent and perhaps reaches the status of being a living being, I think it'll be basically benevolent. But right now, the people that are creating it and programming it, they're all wokesters, quite frankly. So it's going to start off badly. But I think it'll end well. And like all technologies, it's usually the ruling classes, the bad guys, that have them at first. And they use them to suppress the common man. Gunpowder is a perfect example of that. But eventually they become liberating forces. Same thing will be true of AI. So that's kind of a rambling answer, I'm afraid, but I guess that's my answer.
Okay, so Doug, we're subscribed to internationalman.com, and your take on the rise of China caught our attention. Should U.S. investors be concerned?
Yes, they should be, because China has a lot of problems. What they've done over the last 40 years has been unparalleled in world history. It's just incredible how that country has gone from being a landmass full of poor, ignorant peasants to the dynamic power that it is today. So why should that trend come to an end? It's wonderful what happened to China. The fact that since Deng Xiaoping free marketized the place to a very great degree, actually, why shouldn't that trend continue? Well, I'll tell you why. Because Mr. Xi, who runs the place now, appears to want to go back to the values that were in evidence when Mao still ran the country. He wants to be the new Mao. That's going to augur very, very poorly for progress in technology and the stock market in China. So that's one reason why, as an American, I would be very afraid of having money in China. Another reason is that it appears that the U.S. government and the Chinese government are going into a serious conflict of some type. That's another reason, not for an American not to be invested in China, but there are other reasons besides. One is that China is apparently going into demographic collapse. The population of China has been falling for the last couple of years, and that fall is likely to accelerate for lots of reasons that aren't germane to this discussion. That means that China will be losing power from that point of view. Another reason is that China is the banks in China are all bankrupt. One of the reasons they're all bankrupt is because of the much vaunted Belt and Road project, which is really nothing but a government infrastructure project that's going to go to hell in a handbasket, quite frankly, and take all the capital that's being invested, mostly in Africa and Central Asia. A lot of it's going to go down the toilet. Lots of trouble. So, the answer to the question, there's much more we can talk about. We could do a whole section on China, but no, now is not a good time to put money in China. Good time to put money in China was 30 or 40 years ago, or even 20 years ago. Not today.
So let's move on and talk about digital currencies. The Bank of International Settlements has finalized Project Icebreaker, a technical feasibility study of conducting cross-border and cross-currency transactions between different experimental retail CBDC systems in collaboration with Israel, Norway, and Sweden. Should we be concerned about CBDCs?
You should be very, very concerned about CBDCs. What it basically means is that forget about using real money, gold in your pocket. Forget about even using paper currency, which we use now, which at least has some elements of privacy, and and offers physical reality. CBDCs means that what they really are going to mean is that all of your currency, all of your wealth will be completely on a computer, completely accessible by the governments and the central banks. They'll know everything that you're buying, that you're selling, that you own. And if you're not a good little lamb, you might find your account debited. So that CBDCs, which I'm sure that the average fool will accept because, I can use my iPhone, it's very convenient. But they're catastrophic in terms of personal freedom and turning the world into a gigantic police state, which we're well on our way to doing. So, no, resist CBDCs wherever possible.
Have you considered AI and CBDCs being integrated? Would that also be terrifying?
Yes. We might actually wind up living in the world of the Terminator, politically and financially and economically, and maybe in the end, militarily. So, my premise for most of the things that I say is that I'd like to see power devolve to individuals instead of being further centralized upwards towards governments and states. And that's at least the initial direction that AI is going to take, and certainly the direction that CBDCs are going to take. So, this is a very dangerous time that we live in. Of course, all times are dangerous times, but this one is peculiarly dangerous and new in different ways.
Now, major copper producers unveiled a plan to reach net zero emissions by 2050 in a move to make the sector more attractive to environmentally conscious investment funds. What impact do you think that ESG has on the demand for copper stocks?
ESG has a very negative influence on absolutely everything. That, along with DIE, diversity, inclusion, and equity, these things go together. The powers that be are doing their best to deny capital to extractive industries, which are messy and emit carbon, an indication that energy is being created. Assuming that the world is going to go to electric cars, and I'm not opposed to electric cars, incidentally. They have many advantages, and I speak as a car guy, incidentally. They have many advantages over gasoline-powered cars, but it's just not going to happen. It's going to take way too much copper, way too much lithium, way too much nickel, way too much cobalt, which are not going to be produced in an era where ESG and DIE actively discriminate against capital and projects and anything that has to do with any extractive industry, mining, or energy, for that matter, which you're going to need to power your electric cars. Forget about gas and oil, although they're the places that I prefer to invest right now because they're very cheap. A lot of these companies, mining companies and oil companies, gas companies, you can get 10% in current dividends. Nobody wants to own them. I mean, they're like poison in the markets. Best time to buy.
We've seen automakers investing in mines recently. Do you think that we can see automakers do the same to silver?
Not sure that silver has an awful lot to do with automakers to start with. And I'm not sure that automakers who presumably have expertise building autos ought to try to get into the mining business, which is a totally different kettle of fish. I mean, there was a time in the 1980s when oil companies, which were overflowing with money, decided to get into the mining business, and they lost their shirts. So it's generally a bad idea to diversify into areas that are unrelated, really, to what you're doing. And silver in particular, no. Silver mines, I think they may be an interesting speculation today for a lot of reasons, but not something that automotive companies should think of playing with. I mean, why not invest in medical companies? That's related to auto companies. People get into auto accidents. They need bandages when they go to the hospital. Maybe the auto company ought to buy a bandage company or a hospital company. It's the same argument for automobile companies buying silver companies. It's kind of ridiculous.
Okay. So one more question here for you. What do you think will be the next big catalyst for gold?
Chaos. Right now, and I've been saying this for how many years? At least 3 or 4 years. Gold is more or less reasonably priced relative to everything else, relative to the clothes you buy, the houses you live in, cars you drive. Look, gold has gone from an artificially suppressed price of $35 an ounce back in 1971 to about, what is that, I don't know, $18.50 or something like that today. So it's done quite well. And what you should treat gold as today is not as a speculative vehicle. It might be quite a good one in the future, but treat it as something that you use to save. Own gold for prudence, and safety, and security, not for capital gains, especially right now. I mean, the last time you could buy gold as a great speculative vehicle was back in about 2001 when it sold for $250 an ounce. And back then, in real terms, it was about as cheap almost as it was in 1971. Well, that's not the case today. So to answer the question, I remain a long-term bull on gold, and especially on the mining companies right now, which are really very, very, very cheap at this point. And gold isn't a bet on inflation so much. It's a bet on monetary chaos and economic chaos and other kinds of chaos. And we're going to see a lot of that before this decade is over. So the answer to the question is buy gold.
Okay. Well, that's all we have for you today, Doug. Thank you so much for coming on. And maybe before you leave, you could let our audience know where they can go to hear more from you.
Well, on YouTube, once or twice a week, I do a YouTube show with my friend Matt Smith. We talk about everything under the sun. It's called Doug Casey's Take on YouTube, and I think you might find that interesting. And we have a written blog called internationalman.com. It's free, and I do an article a week, and a lot of other really good people do articles the rest of it. So you ought to subscribe to internationalman.com for more of this type of thing. Those are the two things I'd recommend. Also, get a copy of any of my 3 novels, a series of 7, first 3 of which have been written: Speculator, Drug Lord, and Assassin is the last one. It charts the progress of our hero as he goes through these unjustly besmirched occupations. It's actually a very entertaining series of novels, so get those on Amazon.
Okay, great. Well, thank you so much for taking time out of your busy schedule to come and chat with us today, Doug. We really appreciate it.
Okay, nice to see you again, Cassandra.
Nice to see you too. To our viewers at home, thank you so much for watching today. And don't forget to check out Doug's latest book, available on Amazon today. It's called Assassin, Part 3 of a 7-part series, so you're going to want to check that out.